Hello and good morning, everyone. Welcome back to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. The theme last week was that of a dollar strength due to yields on the longer end rising and weakness in Chinese economy causing Yuan to weaken as well as other Asian currencies. This week, we already had the release of one major data point, which is the Chinese loan prime rate. The central bank cut the 1 year rates but held the longer tenor 5 year rates constant. The other, which would keep JK up late at night, is the Jackson Hole Symposium. For those who aren't aware, it's an annual conference sponsored by the Federal Reserve of Kansas, where central bankers from various countries meet and discuss the ongoing theme. Good morning, JK. What's your take on the Chinese rate cut? And I'm sure our listeners would be keen to know whether rupee will continue with its trend this week.
Good morning, Swaraj. Yes, so while many countries are experiencing record heat in the summer, it has been a wintry feeling in the market with a lot of gloomy clouds hanging over. The most watched development by investors is the evolving situation in China, which is exhibiting signs of implosion, growth faltering, consumption dropping, unemployment rising, and to top it all, we are seeing very big outflows from investors bailing themselves out from their exposure. So the real failure is the real fear rather is the contagion effect that this will have not only within Chinese economy but also on other economies, in an interconnected world. Soon it could be a problem to deal with by everyone if unchecked. So whatever measures they have announced so far has not only been disappointing but has had little impact as well. The latest example being, they're cutting PMLR by 10 basis points but leaving the 5 year rate, which is crucial for the property sector, unchanged. So Chinese yuan has again broken above 7.32, which it had managed to resist on Friday. And we have other bad news as well. Netherlands becomes the second country in Europe to get into a technical recession with the 2 quarters of negative growth. And as for the US economy, the good news on the economies has been turning to be a bad news because the consumption, industrial production, and GDP all beating expectations. There is a high probability of rates remaining high for much longer, while the some Fed members are expressing that rates may have to be hiked more in order to get to the inflation target. And finally, the UK economy, which had been seeing consumer resilience so far, despite hefty rate hikes, saw its retail sales crumble by 1.2% month on month in July versus 0.5% drop that was expected, with cost of living at last biting. The total retail sales are actually 16.4% higher by value before pandemic, but 1.8% lower in volume of goods. So we actually see the actual volume retail sales has been falling. And let's not forget that the Bank of England is still raising rates, and possibly the rates will go higher than Fed funds rate at 6%. Now, coming to India, India is also heading for one of its driest spells in August in more than a century, with scant rainfall likely to persist across large areas. Partly because of the El Nino effect weather pattern, according to the weather officials. So overall, the market is still, seeing how the effect of China will, play out in the coming days. There may be a pause this week ahead of the Jackson Hole. And also, this is the last week before the summer break ends, and we could have a liquid, full market from next Monday onwards. Before that Jackson Hole is there, we have some manufacturing PMI numbers from various countries as well. Then we also have the BRICS summit, where, of course, the indications are that the currency concurrence may not emerge. India, being one of the prominent members, is probably not going to support the floating of the currency right now. That's what the reports indicate. So markets have been on slightly calmer, but definitely undertone is one of nervousness. Yields have retreated somewhat. It's more of a profit taking by sellers at the bond sellers at the highs of yields. We also had the stock market, which is tentatively poised, and definitely looking vulnerable for more falls with bad news coming from China. On the currency, the major currencies are holding up, but the Chinese yuan and the related commodity currencies, which depend on the growth factor, like Canadian dollar, Australian dollar, etc., are still under pressure. Japanese yen is holding above 145, but shy of 146 because intervention is very probable. Where it happened back in September, big intervention happened, and we had a sizable fall in the dollar yen as well. Now, come to the rupee. We had it, technically 2 days of close above the psychological 83 levels and a weekly close as well. That is seen as bullish. Slowly, we are into a situation where only the central bank is a seller, and without a positive turn in the global sentiment, pressure will sustain on INR to weaken more course. Slightly more negative for the rupee is Moody Investor Services on Friday, affirming India's long-term local and foreign currency issuer ratings at Baa3 and retain the stable outlook while flagging risks from countries' high debt burden and curbs on political dissent. Now, if you remember, India had been pitching for an upgrade based on the growth prospects as well as the fiscal position, but the Moody's Investor Services have held back the rate at the same level. And although they did say that India's economic growth will outpace all other G20 economies through at least the next 2 years, driven by domestic demand, but they also said the fiscal strength remains a key weakness in the sovereign credit profile, balancing high economic strength and expect a high nominal GDP growth and ongoing fiscal consolidation to stabilize the government debt burden at high levels. So it's a mixed commentary. On the one hand, growth is being appreciated, but they are skeptical about the fiscal being maintained. And also they talk about populist measures coming up in the coming months as we head into the election. So rupee bulls have been hoping for a rating upgrade on India as well as the equity guys. They could be somewhat disappointed. Rupee, I think we tentatively hold 83 and 83.25 range. Look at the flows on both sides to determine the next direction. Thank you.
Thank you, JK. And the contagion effect of the entire China issue is something investors would be concerned about, and they would be looking at the developments that are happening in China. The yuan again broke 7.32 after the cuts by China were perceived to be not enough by investors. When it comes to Europe, Netherlands entered a technical recession, and when it comes to UK, the economy saw retail sales crumble on a month-on-month basis, 1.8% lower on the volume front, while it was higher when it comes to the price front. This week, we have got the manufacturing PMI numbers from various countries. We have got the BRICS summit going on. We have got the upcoming Jackson Hole Symposium. So a lot of developments that will be coming in when it comes to the global financial markets. For rupee, we had a weekly close above the psychological mark of 83. And it's widely expected that it will hold the 83 and 83.25 range. That's it from us today. Thanks for listening, and tune in tomorrow for another round of fresh updates. Thank you.